So yes, we are opportunities. Let's see, let's start with DXY. My projection on DXY was pretty on point. I simply wanted the this inefficiency to be filled, and so will the price retrace. I just called this out and it went in my favor. Great. Let's start with currency pairs. See, nowadays, since war and everything is going on, the inverse relations with DXY of every other asset, every other pair is working very accurately. Like previously, we used to see that gold and DXY both are moving up, or they both are falling, or gold is like in a range and DXY is going up. So there were certain scenarios which used to happen earlier, but they don't happen these days because of these news and stuff. Fundamental side has affected more. Even the DXY and Nasdaq correlation is pretty much working very good. So now let's see what we can expect in the coming week, which will be from 27th to 1st of May, right? Sorry, 27th April to 31st April. Let's see. So I'm still expecting DXY to fall and come to these zones here, and even if you go on the H1, I just want it to fill this zone completely. I'm slightly expecting that DXY will fall to this zone. I'll tell you why. If you go on the daily time frame, you will understand my perspective here. Price has reacted from that inefficiency very rapidly, very aggressively. Okay, and even if you go on the H4, you'll understand price is simply making bearish engulfing candles. So by this month end, you can see that actually I'm expecting it will come and fill this zone. This is all I can say on the XY, but it will definitely come here by Monday in the London session. But for that, price must go slightly up and then come down. It shall first test this zone again, and whatever it will then keep falling. You can see this happening. Uh, the US 30 is still in a range. Though I am expecting the price to tap this zone first and then fall because we are sort of in a retracement state. If price wants to go higher, it must come to a very good liquidity zone first and then it will go up. Okay, it must sweep these zones first. This is a line, okay, which I've drawn, not the wick. So yeah, I'm expecting the price to first tap this zone and then fall, and then it can go up. So this is all I have on US 30. NQ it will keep going up unless and until we see uh, daily bearish engulfing candle or bearish engulfing candle on H4. You can simply see that price is reacting to every order block and everything. So what I'm expecting now on NQs are it will fall till here and then again continue going up. Same with ES and NQ sinks. Dow has a total different momentum, but they uh, move inversely to DXY. All indices move inversely to dollar index. So on the same, even on ES, we can still expect the price to fall a bit and then uh, continue the retracement. I don't trade oil, but looking at the H4, you can see why it wants to fall. Price has been continuously making new lows. Okay, this is just a sweep. This is not a break of structure or anything. This is just what you call as market sweeps. Why markets does that? Because uh, after a few breaks, structural breaks, okay, the price has literally exhausted and it wants more liquidity to move on the current state, or you can say continue the trend. So what will price do is that price will sort of put in confusion that okay, this break has happened now. The trend might change, but it doesn't. Okay, the trend doesn't change. It will continue falling down. People will start saying that, oh, damn, now at this zone, the price has made internal shifts and everything, but no, the price will still continue falling. Now let's see gold. Okay, if you start with the H4, you can see clearly, okay, that first, okay, I'll start from the, I'll start again, okay, no problem, I'll start again. See, this was our first break, okay, of this structure. Then price made this, then this was all this is, all these are internal structures, okay, this, this, internal shift. Now that price has bounced back to the original discounted zone of this trend, okay, we can say price has literally swept all these lows and it is now ready to move up. I'll tell you why. If you go on the H1, you will understand my logic, okay? This is the low which is being protected every time. Price taps the zone, moves up. Taps this zone, moves up. Now that price has finally come to this zone again, and even on the H4, we can see a good order block forming, formed right here. What I'm expecting is let the price see. Uh, I'm expecting DXY to move slightly up. Okay, if it moves, which it will obviously, price has to come to this zone to take out these lows. Okay, let it take out these lows first. Then obviously we will get a good break of structure on the M15 or M5 like yesterday. Once we get a good structural shift. Like I'll tell you what structural shift I want, and then only I will enter. Okay, I won't just react to the bullish structure or anything. I'll tell you what I want, and if that thing happens, then only I will enter. Okay. See, I'll explain. I just see, I'm marking this out over here. Okay. What I want is let the price come down like this. Okay. Once it has swept every low, let the structure break. Okay. Or else, first I'll talk about this and then I'll go to the other uh, scenario. Okay. Then it must break this low and it will go up. But my entry will be, see, this is my M5 structure. Okay. But the same thing will happen on M15 as well. Okay. So what I want is when the price breaks this low, I just want one good order block formed here. I will wait for the tap of the order block. Okay. Wait for the tap on OB. Then we will enter. If this happens, good, we enter. If this doesn't happen, we don't enter. Okay. This is my only model which I will follow. On Monday, model, say it as model or trade entry or concept or trade idea, analysis, anything. Okay. But if this happens, then only I will enter a position. Otherwise, I will just uh, pass on gold. Okay. I will go on to other pairs and see what's happening there. There is also a possibility that the price might not break this lower high. Okay. This lower high. It will just form a good equal high again here and it will react to the inefficiency which is formed here. Okay. On the M5. Then it will break this structure on the M5, come down. Then you will be clearly able to see that on the M15, the price has broken all those lower highs in that particular range and then it has tapped one good inefficiency, or you can say order block or whatever FVG imbalance, whatever terms you guys use. Then we will enter. Otherwise, I'll pass on this setup. Okay. Same I am expecting on silver. Same entry model. Okay. So even if we see here, there is no such particular low which the price is like protecting. But you can clearly see there is this order block to which the price has reacted. And this is the extreme order block. Okay. Uh, the setup which I told you is the model itself is an A plus model, works like eight to nine times out of 10. Uh, but the only thing which matters is your entry. If you want a good RR, let's say 2, 3, 4 RR trade, okay, you have to be your entry has to be precise at the very lows. So even on silver, what I'm expecting is let it come down first. See, if you go on the H4, you will see this order block being formed. Okay, if you go on the H1, you'll see that this zone is pending. Okay, so price will come down and take these lows. Once it has swept these lows, let it cool off. Okay, uh, what will happen? I'll tell you. When price starts falling here, I'll erase it off and I'll show it again. This is our order block, right? This is the previous sell to buy zone. Now what I'm expecting is that this H4 order block must be filled. Okay. If you go on the H1, you will see that there is also more space down here. Like if I keep refining it, okay. I just want to refine it. We have marked the H1 order block with respect to the structure. If you go on the M15, you will see that price has more room to fall down. Okay. Now, uh, wait, I'll remove the drawing for better clarity. Let the price fall to this zone. Okay. Let it fall till here. Let it sweep the entire thing. Okay. The entire structure. Wait for an order block to form or an inefficiency to form, then we can plan our trades. Okay, like you can enter here or you can enter here as well. But uh, if you wait for the break of this zone, it will be better because that will give you more clarity, more confidence to hold. And I'm expecting it to tap this zone by Monday NY or Tuesday morning. There is a possibility it will hit on Monday itself, but we will wait. No problem. Uh, on the Euro USD, same thing I'm planning. I just want the price to come and tap into this zone again. This is the FVG or imbalance, what they call as. But I will wait for the price to sweep the lows, then give a break, then continue the upside trend. And I'm expecting the price to fill this gap here. Okay. Now that this is a what 40-point range, 40 pips range, which is like okay, possible. The ADR on Euro USD is somewhere between 30 to 55. So we can expect this move. We are not expecting like a 100 pip move or anything like that. So yes, we can. For intra, yes. And the same thing on GU. We start with H4. We see that there is a good zone which is untapped again. You can also expect the price to move here. But first, I want the price to come down a bit lower and then react to the price. That's it. This is all I have on DXY, indices, gold, silver, and Euro USD. That's it. Thank you.